Joining us now is Dominic Schneider. He's UBS Wealth Management. And Dominic, hi, welcome to the show. Let's start with gold first. And the prices are down more than $50 in last couple of sessions. The gold is trading at a 9-month lows right now as investors' holdings decline. How are you looking at the markets? Are they waiting for further decline before they start buying in, or would you see further decline in prices?
If you look at the weakness in gold, it really relates to the fact that there is no inflation pressure around, especially in the developed world, and with the dollar trading on the strong side, there's not much interest from financial investors to actually pull into the yellow metal. And I don't think that's going to change in the very short run, so we're going to test the 1525 in the coming days, and with the risk factor to actually test 1450. So investors should not expect much of an upside over the next 3 months. Nevertheless, despite, let's say, this soft patch that we see in the gold price, I still stick to the view that in the long run you're going to see higher prices to really rebalance the global economy, to get rid of all the debt that we have in the developed world. I think higher inflation is needed, and I think that will turn investors away from cash, from currencies, into real assets, and that will definitely benefit gold.
Well, all right, 1450 is your target coming in for the gold in next 3 months, Dominic. But what's your sense coming in for silver now? That one also is at an 18-month low. Platinum is trading at a 3-month lows. Now yet again back to discount to gold. Where do you see the support kicking in for these metals?
With regards to silver, we do expect around $26.5, $26 an ounce, some technical support. And I think key factors to really look at is, first of all, gold. When gold weakens, normally silver does weaken much more. And the other factor relates to the macroeconomic data that came out, which actually disappointed market expectations and probably dented a little bit the outlook for industrial application, which still accounts for 50% of overall demand. So with these two factors in place, you need to be a little bit careful that these support levels probably are rather soft and really hard floors. In the case of platinum, if you look at we trade into the production cost curve, there are a lot of producers being challenged. There are wage negotiations going on in the coming months. I think that clearly gives you an indication the prices shouldn't fall even further. This also depends obviously on the global economy, as its use is tied to the auto industry. I think that needs to be considered. Overall, if your view is that the economy starts to recover into the second half, both of them should actually do pretty well, I would say, with a trough in the second quarter.
And Dominic, it's not just the precious metals which have declined. If you look at the base metal prices, those also are making a multi-month low. Copper prices are weighed down by weak factory orders in China and US, and also high global inventories. Where do you see these prices headed?
With regards to copper, the short-term story remains a little bit constrained as well, simply related to the fact that the numbers that came out of China are not that supportive. What we need to see is really an acceleration in industrial activity, and so far it's not yet taking place. If you look at the leading indicators and if you look at what happened on industrial production side. So the lack of growth acceleration really keeps on inventories going up, and that clearly burdens prices. I would say price dips below $7,000 a ton should be used to actually build up some position, and that really relates to the thought that China will accelerate into the second half. We do expect a little more stimulus measures, and the soft patch that we might see in the US, let's say in the second quarter compared to the first quarter, is just going to be temporary, and then we're going to see actually some improvement, along with our expectation that Europe should stabilize. And I think if that take into consideration, then a recovery is in place, but very short term dip below 7,000, that's in the card.
Dominic, also what's your sense for aluminum, because that is trading at a 7-month lows as well on LME and multi-year lows in Shanghai as well. The high cost of production and low demand is putting stress on producers as well for that one. How do you see the trajectory for aluminum now?
Well, aluminum should really trade sideways. It should trade where it is actually. It should trade deep into the cost curve, trying to motivate more adjustments on the supply side. The market still remains oversupplied, not that much I would say in outside China, but here we already have seen quite some adjustment, and current prices are challenging to producers, but there is still ample production going on in China, so the market remains in a surplus, so prices need to stay low. Production capabilities are ample, and that's something very similar as you were talking before about copper, where supply is actually this year in a better shape.
Renisha Chinani, she's commodity analyst at Edelweiss and joins us live on the show as well. Renisha, hi, welcome. You heard what Dominic Schneider really had to say, but what's your own sense now coming in for the gold and silver prices with the kind of declines that we have seen, not just the international markets, but in the Indian calculations as well?
Hi Manisha. Yes, my view is similar to Dominic's as gold and silver are continuing to underperform in other commodity complex. Prices have come down very sharply in last few days. Gold has come down to 1550 and it's broken the important support level. The next support is 1525. If that is breached, that is an important crucial support level where the 12-year gold long-term trend would be at risk. So I'm even bearish in gold. Gold has also lost its safe haven appeal because market participants are now taking out their money from precious metals and money market and shifting to stock market. So you have seen that the ETF holdings have come down very highly from around 10% this year. So I would advise to sell gold around 29,300 with the stop loss of 29,550 to 29,600. Targets would be 29,000. We have also come up with a sell report on gold. If $1,525 is broken, we can even see levels like $1,470 at COMEX.
Renisha, how would you want to look at the base metal prices? Because that's another sector which has been really reeling under with no respite on the higher side at all. What's your sense? Which one would you pick up here?
Yes, base metals demand is also very lackluster in China and Europe. And if you see the inventories, they are trading at multi-level years high. Copper's inventory is at 10 years high. Nickel inventory is at all-time year high. So this is pressurizing the prices. I would even recommend to sell copper around 406 with the stop loss of 409. Targets would be 402 on lower side. Even look around to sell nickel at current prices at 885 with the stop loss of 894. Targets 870 on the lower side.
Renisha, one final word on the energy space, and while we have seen a bit of a turnaround onto that one, doesn't really look very confidence giving. What's your sense now coming in for the energy space?
I think crude oil has topped out around $98 2-3 days back, and as $95 support level is broken, I think $92 would be the next level to watch for. And as yesterday's inventories were bearish, it suggested that inventories are at 22-year high. So this downtrend would continue. I would recommend to sell crude oil around 5220 to 30 levels. Stop loss would be 5320. Targets 5100 on the lower side.
Harish Kalipelli from JRG joins in on the show. Harish, hi, afternoon. Let's start off with your view on gold first, and what levels are you monitoring there?
I think both gold and silver are going through the weakest phase in the recent past, largely due to strength in dollar as well as declining investment demand or investment sentiment in gold. If you look at last 1 decade or so, we've seen a consistent rally in gold, but looks like I think this sentiment is slowly fading. So I think given this current condition and also the positive sentiment in equities, at least in US and Eurozone, I think that also is weighing on the prices. So overall, I think we recommend to be on selling side only. As far as levels are concerned, one can look forward to sell around 29,300 levels for a target of 29,000 or so. So as stops are concerned, one can maintain about 29,380.
Harish, so would you be similarly bearish on silver as well and look to sell silver?
I think silver also is displaying similar sentiment like gold. So I think this fall should be extending towards 50,000 initially. No doubt 50,000 is an important support area, but I think even at current levels, I think 50,800, 50,850 should be a good level to enter with a sell position for a target of 50,000, and one can keep stop loss above 51,250 or so.
And what about your views on crude?
We've seen the entire commodity basket is under pressure, largely due to strength in dollar. And also, if you look at crude oil, though the inventory yesterday's inventory report was largely steady, but this bias slowly shifting towards negative side. So I think this trend is likely to continue for next 1 or 2 sessions. So we recommend to be on selling side again in crude oil. Probably 5,140 levels should be a good target area downside, and one can enter with sales around 5,190, keeping a stop value 5,220 or so.
Harish, you're not looking to buy anything today. What about copper? Would you look to sell copper as well, or would you have a different strategy for copper?
After a sharp decline, I think copper is now, it looks like it's consolidating between 400 to 410 levels, but broad sentiment remains weak, especially the demand side dynamics are turning weak, with inventories both in Shanghai and LME increasing to recent historic highs. So somewhere I think the sentiment is turning weak. So soon we are expecting copper to break 400 levels as well. But as far as today is concerned, I think selling around 405, 406 would be ideal for a target of 400. And as far as stops are concerned, one can keep stop loss above 408.